Hello everyone. Thanks for joining for the top economic news of the day. Subscribe to the channel for quick and daily updates from the Economic Times. So the first news of today's Economic Times: Vi's 2,000 crore preferential issue to kickstart larger insurance plan. So the Vodafone Idea would be raising 2,075 crores from Aditya Birla Group entity. The shares will be issued at rupees 14.87 apiece to Oriana Investments Private Limited. So this has come after the board's meeting on Saturday, and the board has shown confidence in the company, and they have also authorized the increasing the share capital to 1 lakh crore from the earlier 75,000 crore. This increased authorized capital aimed at accommodating more equity investors because earlier UK's Vodafone Group they had refused to influx more funding into the venture because they had already written off their investments in the loss-making Indian telco, and they are no more interested in investing in the company further. So currently it's the Indian government which is the largest shareholder in V with a stake of 33%, and this has come because of the in lieu of the dues that they had given as a part of a rescue plan to the company. Now, the fundraising would be done in the two-part plan by the company. First would be the 20,000 crore via the equity, and then they are targeting by the June end. And then it will be followed by another round of fundraising of 25,000 crores from lenders as a debt. So, as per the Goldman Sachs, the company would require another 8 to 10 billion dollars fresh capital over the period of 2 years for the expansion of 4G services and rollout of the 5G technology. Moving to the next news on Swadeshi Movement 2.0. Buy Indian, buy Western. Gen Z embraces the home truth. So, as per a recent study, youngsters in India prefer locally made tech, FMCG, and personal care products. The study is conducted by Nielsen IQ, which says that almost 100 million Gen Z consumers in India are shaping a new form of patriotism, going beyond traditional notions. So the study says that 40% participants would endorse products brands, celebrity diversity, which says Indianness with pride. 82% would advocate for personal care products for Indian complexions, and they prefer customization. The top spending products would be technology and gadget, product upholding, healthcare, and wellness products. So, just for the examples, wireless speakers. Now, the local brands they command the share of 78% in 2023, up from 48% in 2020. Similarly, for the smartwatches, the local brands now have a total sales of 95% in 2023, from 38% in 2020. Next news is from Wipro. Its CEO Thierry Delaporte has resigned after a Saturday meeting of the key board members. The decision has come that the company veteran Srini Palia would be taking over. Delaporte, who was the first European executive to lead Wipro, he had another 1 year left after the total 5 years term as a CEO. He had joined the company in 2020 from the Capgemini Group. This has come on the backdrop of the consistent poor performance of the company. Its value had eroded by a third in its stock from the peak of Jan 2022. Operating margins has also been coming down consistently from 19% at June 2020 to 16% in the last December quarter. Moving on, big global funds power JSW Energy's 5,000 crore QIP. It's the largest power sector funding in a decade. So the company is raising 5,000 crores for via, by selling the shares to institutional investors like BlackRock, Nomura, Wellington, Abu Dhabi Investment Authorities, and all. It's a first equity funding by the company since its listing in 2010, and the funds would be used to settle debt and also for the investment in the company's renewable arms, JSW Neo Energy. The allocation of 10.3 crore equity share will be done at rupees 485 per equity share with a discount of 25.09 rupees per share. This is a 4.92% discount from the share price of rupees 510.09. Next news article. Luxury in electric cars means range and much more. And these more things are autonomous vehicles, potentially featuring no steering wheel, blistering acceleration, and cockpit-like interiors. With the recent policy change by the government of India, now the import duty on luxury cars has come down from 100% to 15%. This is applicable for EVs which are priced at 35,000 or more. This comes with the condition that the company will have to invest 500 million within 3 years to establish manufacturing plants in India. Currently, the luxury EV market share is around 7%, and it is expected to grow to double digits over the next 2 to 3 years. Recently, the Chinese smartphone maker Xiaomi has also signaled its entry to EVs. Next news is on a ruling by Punjab and Haryana High Court. They have directed Income Tax Department to keep taxpayers informed about the actions they intend to take. Currently, the practice is that after the assessments of individuals or corporates, if there are any discrepancies which income tax department observes, they simply post it on their e-portal and expects the individuals or the corporates to get this information from the e-portal and act accordingly. They don't extend any information through email or letter. So the court observes that this might lead to a or gap of communication. There are high chances that the individuals would miss that this information because nobody, regularly checks the updates on the e-portal of the income tax website. So this also comes with a risk of increased penalty of 10,000 for every default. If there are some summons or some notices there on the e-portal and somebody misses the deadline as per that summon, then an additional 10,000 penalty is there, which so accordingly the court has directed them to inform the individuals or corporates through emails or letters also. Next news is from the electric two-wheeler manufacturer Ather Energy. Its co-founder Tarun Mehta says that the company is looking for external capital for new product launches and for the growth of business. It also urges the third version of FAME, which is faster adoption and manufacturing of electrical vehicles in India subsidy scheme. The two-wheeler EVs could see degrowth and some product become unviable. This is the concern or the fear shared by the company co-founder Tarun Mehta. He feels that the subsidies are very important for the industry. These comments have come in on the backdrop of FAME 2 scheme, which is lapsing on March 31, and the government is allocating another 500 crores for Electric Mobility Promotion Scheme 2024. Ather has raised 900 crores in funding from two-wheeler manufacturer Hero MotoCorp and Singapore Sovereign Wealth Fund GIC on last September. On Saturday, they have also launched Rizta range of scooters focusing on the family market, and its starting price ranges from 1.09 lakhs. It comes with the two options, Rizta S and Rizta Z, with a range of 123 to 160 kilometers. This is all for today. Subscribe to the channel to keep in touch with the economic world.